You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again with the Crypto Rundown, the program here on the Options Insider Radio Network, where we go a little bit further afield than our traditional stomping grounds of your Apple, your Tesla, your SPY options, all that fun stuff, and look and see what's going on out there in the world of all things crypto derivatives. We're going to talk about the volume, the volatility, the skew, the OI, the big trades, all that fun, and a whole bunch more. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. Thanking all of you out there who continue to leave ratings and reviews on your platform of choice for the old Crypto Rundown show. Even though it's a new addition to the network for me, it's been running for years now, so it's a new kid on the block to me. It's been around for a few years, so we have quite a few of you out there who are enjoying it, seeing the numbers, of course, exploding year after year for this show and indeed for the network. So first off, thanks to all of you out there who continue to rate and review. And of course, you should be listening to the full network. If you only subscribe to the Crypto Rundown, you're really just getting a small sliver of what we have to offer here on the network. And speaking of the offering on the network, if you want to go above and beyond, you want more in your lives, you want, let's say, 200 plus hours of pro content, great pro Q&As, a lot of them on the crypto side, a lot of great guests from the world of crypto making it into the hot seat on our pro Q&A sessions, as well as, of course, the Options Oddities program at the end of every week, breaking down the wild week that was from an unusual activity perspective. Great giveaways, live access to this and everything else we do on the network, and a whole bunch more. You know where to go. theoptionsinsider.com/pro is the place to go to learn more about that. As we keep on going right on into our first segment, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everyone. Welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up on the old Crypto Hot Seat is a newcomer to the program and indeed to the network. He is Josh Schwartz, the co-founder and CEO over there at Fortify. Josh, welcome to the Crypto Rundown program.
Thanks, Mark. Great to be here.
And Josh, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the crypto space, as well as what the heck it is you guys do over there at Fortify.
Sure, happy to do it. So first, I come from a much more traditional financial background, like many people in the space. And for the last 5 years, I've been in crypto all at wallet and custody providers. So I started my career at BitGo, which was the first institutional wallet and pioneer of multisig. And then I was the chief operating officer at Curve, which was one of the first MPC or multi-party computation wallets, which we sold to PayPal in early 2021. And then along with my two co-founders, Michael and Dima, we've been working on Fortify since later that year. And so Fortify is the first and only institutional MPC wallet that's purpose-built for DeFi. We offer our clients secure MPC key management, which I'm happy to talk more about, as well as smart contract transparency, connectivity, and risk controls. We work with some of the largest trading firms, funds, and Web3 companies in helping them manage their risks associated with DeFi and helping more firms integrate the benefits of DeFi within their operations. Maybe it's just helpful to share a little bit more context of sort of what's happened in the space and how we got here, right? So over the past year and a half, the story of DeFi was front and center, which was a major change from the first 13 years of crypto, where crypto was mainly the use case was like to hodl tokens or transfer them, like for CeFi settlement. And all of a sudden we were seeing like real use case of blockchain in the form of like trustless access to liquidity, yield, et cetera. Well beyond the proof of concept of like crypto kitties. And this is accomplished by the use of smart contracts, which take code that could be written by anyone, but enforced by everyone. And that provides the trustless ecosystem. And so, we came to the realization that from a custody and security perspective, protecting a transfer, like that first 13 years, is sort of very different than protecting one's interaction with smart contracts. And we've seen billions of dollars, unfortunately, have been sort of hacked or compromised in the world of DeFi. And so, we've set out to build Fortify to be like the first purpose-built solution to secure institutional access in DeFi.
Seems like this isn't your first go-around with institutional-oriented crypto wallets here, Josh. What is it that keeps attracting you back to the world of institutional wallets over and over again?
Yeah, it's really interesting. Coming from a traditional background, this is like a very unique asset class. That was my first aha moment when I came into the space, right? That we don't think about custody per se when we think about traditional assets. I'll just give an example. We've seen whether it was flash crashes or other forms of markets going haywire, and we've seen centralized entities in traditional assets being able to bust a trade or reverse something that happened. And of course, we know here that the beauty of the blockchain is that it's immutable and anonymous. But as a result, this all sort of hinges on the appropriate security of that private key. And so for me, just whether you're a CeFi player who's trading on centralized exchanges, or whether you're going deeper down the rabbit hole and really adopting all the benefits of DeFi, it all sort of starts with the custody.
We've had a lot of guests on the program over the years talking about custody and wallets. It's obviously a very hot and ever-evolving side of the space. Haven't had many of them talking about wallets specifically aimed at the DeFi market. What is it about a wallet aimed at DeFi? What sets it apart from a traditional wallet? Is it just, as you kind of mentioned, is it just the facility to be able to handle the smart contracts, or is there more to it?
Yeah, no, there's a lot to it. So I'd say the way I like to explain it is sort of from a non-technical level. I say DeFi settlement or transfers are akin to signing a check, right? So all the wallets and custodians, they enable the decision of, well, who should sign the check? How much can the check be written out for? To whom can receive such a check? But actually, you also trust the details of the checkbook per se, right? And you can't sort of sign something that wasn't in the parameters given to you in the checkbook. Whereas when we interact in DeFi, the challenges are very different. So I say it's more smart contracts are actual contracts. And what do you tell people when you sign a contract? You better read the fine print. And sure enough, most of the funds that have been lost in DeFi have really just been due not because people have lost, or compromised the private key, but because they didn't realize what it was that they were actually signing. They don't understand smart contracts. And so, whether it's a front-end attack or a phishing attempt on a particular dApp that all of a sudden asks a user to sign a malicious transaction, but the user has no idea that they're even being hacked because they don't understand what the contract's actually doing, or whether it's a compromise in a pool, but the user had no idea that they had even given unlimited allowances from their wallet for that pool to drain their funds. They're just unaware that they're even being attacked. And so, yeah, I think when it comes to DeFi, and I'd say the last piece is, unlike the example of where you could only, sign the parameters of the checkbook, here, as we know, there are new dApps that pop up every day. It's the beauty of DeFi is that it's an open system and people can continue to iterate. But this means that the main way that people interact with DeFi is when they connect their wallet in and they actually sign a transaction, then any unlimited number of dApps are actually generating. And any of those dApps, of course, and any of those contracts can be malicious. And so for Fortify, there's sort of a bunch of pieces of the stack. The first piece that we handle is the connectivity. We built our own browser extension. And this is also really important because, there are extensions obviously that exist today, but, either you've got like retail wallets, where the key management is not good because you've got like a single private key that's in the browser, or you've got institutional wallets that are sort of like very chain specific. And I think of the example of imagine if, your listeners would have a solution to trade Microsoft, but need a totally different solution to trade Apple stock. And so same type of thing, institutions that are interacting in DeFi want the same workflow regardless of, the chain that they're interacting with. And so we built an extension that works cross-chain. The second piece we said is like the smart contract enrichment. We simulate every contract before a user or their approvers, go ahead and interact to show them like what will be the balance changes on their wallet. We're basically translating every smart contract into plain English. And then a bunch of other alerts like, hey, was this the first time that you're interacting with this particular contract? Like if every single day I do the following yield farming strategy and then all of a sudden, one day it's telling me this is the first time that I'm interacting with this contract. I'm like, well, that's weird because I do this every day. And so it would alert me that perhaps something's going wrong. And then the last piece of our stack is sort of a DeFi-focused policy engine, which enables institutions to set their own policies and governance rules as to how their users will interact. Sometimes they'll want a trader to have limited abilities to interact on like only whitelisted dApps up to certain amounts. And this is the type of stuff that they can only do with a DeFi-focused solution.
It is hilarious to me that we're talking about institutionally oriented DeFi at the end of the day. There's almost a contradiction in terms out there. A lot of the firms that have come to us on this show, they have an institutionally oriented offering in the crypto space. They're typically trying to replicate something that these traditional finance firms are used to that eases their comfort with crypto. Crypto already an asset class a lot of big firms are skittish about. Now you add on something like DeFi and it just blows their mind entirely. So they try to replicate something that they're more comfortable with. They offer a crypto offering with central clearing or something along those lines to kind of ease that comfort level. You're coming to them now, institutions are saying, hey, let's talk about crypto. Again, something they're already skittish about. And then on top of that, you're adding DeFi. You're bringing DeFi to these institutions. So I'm curious for you, how do those calls go? How do you bridge that gap? How do you overcome that reluctance and lure them to the dark side of DeFi there, Josh?
Yeah, it's a great question. I think over the last 5 years, I've watched already the general adoption of different, whether it's financial firms or more traditional corporations that have been adopting all the technology that blockchain digital assets provide. I do think there's an adoption curve, but ultimately, DeFi is actually, it's a bit of the solution to the problem that a lot of these traditional folks are facing, right? We have this false sense of security, whether it's the counterparty that we trust. And then, sure enough, all through financial history, we've been time and again shown examples of where, centralized entities actually become the problem. And it's those same entities that we actually felt secure and trustworthy with. I think of, obviously more recently, we had a similar issue in the crypto markets with what's happened with FTX. And again, this is another example of this is a centralized entity, and I think there was a great, one of our investors, Pantera, put out a letter in the middle of the year as a response to, I believe it was a New York Times article after the whole 3 Hours Capital and Celsius sort of debacle. And New York Times, I think, wrote an article about the death of DeFi. And Pantera responded and said, actually, DeFi is the only thing that's working. These are CeFi institutions that continue to fail. This is nothing new to our industry or asset class. And actually, while some of those institutions were halting withdrawals from their clients, i.e., a failure of CeFi, they were going on, platforms like dApps, like Aave, et cetera, to liquidate their funds, because you can't call Aave and say, hey, I want to pause withdrawals. That's the beauty of a trustless system. And so I think if anything, DeFi obviously has a long way to continue to. It's an education. There's regulatory questions, but I think in general, just the conscious mechanics of DeFi actually solves for the trust issues.
It's funny you mentioned FTX, because you're right. As you said at the start of the show, that has really brought DeFi into the crosshairs, into the limelight quite a bit. It does seem like that moment, that FTX meltdown, really crystallized the crypto space, and it in many ways fragmented it into two camps. People were always leaning DeFi or essentially cleared in the past, but it seems like that really solidified people's views on the issue. Some people, as you mentioned, thought, hey, DeFi is the solution to this, and so they're leaning much more heavily into that. And others have been saying, hey, we've been saying it all along. This crypto space, it's kind of the Wild West. We need something more along the lines of what we know and what we trust, which is central clearing. We've seen firms like CME and others really kind of beat that drum going forward. So it does seem like this has very much caused a bit of a schism, or maybe even deepened an existing schism in the crypto space. So I'm curious for you guys, Josh, as you're going out there now with an offering that is very clearly focused on the DeFi side for institutions. What has that been like for you post FTX? Have you seen institutions who maybe were already on the fence about crypto? Have they been dialing it back in the wake of all the fallout of FTX? Or has it been maybe a little bit more of an educational process, and maybe you haven't seen the drawdown you anticipated in interest post FTX, Josh?
Yeah, great question. I think, unfortunately, FTX had its effect on the entire industry, right? And regardless, and then to your point, even what we're seeing now about whether it's regulatory feedback, et cetera, on things like DeFi, like you said, even though FTX has nothing to do with DeFi, I think there is this example of sort of it did sort of set things back, and some of the growth trajectory of the industry set back, which is very unfortunate. But at the same time, look, we see stories, for example, there are funds who I've spoken to, and it's very sad stories, but funds who have told us that they kept a lot of their funds on FTX. And as a result, either lost all or a large portion of their assets. And so those who didn't lose all their assets and thankfully did not go out of business, now, this was a bit of a wake-up call to sort of how they approach their own operations in their own custody and leaving funds on exchanges. And there's been, in general, I think, a couple of different approaches of how to solve for this trust model that, I'd say the FTX story has sort of broken in the industry. And the three main approaches has either been increased regulation, i.e. use custodians. On this one, I would say, obviously, there are some instances where regulated custody is a good thing. On the other hand, if FTX had all their assets held, at a third-party regulated custodian, and my funds were on FTX, and I thought something was going on that was nefarious, and I called that custodian saying, "Can I have my funds?" The custodian would say, "It's not your assets, right? It's FTX's assets." And so, regardless of how they use the separate sub-custodian, then that wouldn't necessarily have solved the problem. The second approach is sort of better data, proof of reserves. Obviously, more transparency is really important in space, and I think this is also another good move of this limited approaches now because there's no proofs of liability. So I think in general, everyone's understanding that these are things we want to attack the fact that we have centralized entities offering sort of centralized and not very clear financial products. And so the third one is sort of saying, well, then break both of those. So I'll have, offer decentralized solutions of decentralized products with better transparency. There's nothing more transparent than a smart contract because it's auditable by all.
Yes, definitely been an interesting time post FTX. You're right. Immediately post FTX, a lot of people said they were washing their hands of crypto. This kind of crystallized some of their worst fears about the space, and a lot of institutions were backing away. Then, of course, fast forward to this year, and for the better part of 2023, we've seen the crypto markets pretty much been off to the races. So maybe some firms that were a little bit reluctant, a little bit spooked post FTX, now starting to get intrigued again by missing out on a pretty extensive bull market, at least so far this year. So what are you hearing behind the scenes, Josh? Are institutions, are they still a little skittish, a little bit reluctant post FTX, or has this, for the most part, protracted bull market here for 2023, is that starting to lure them back into the fold a little bit?
Yeah, I'd say there's definitely cautious optimism, right? I mean, we saw good examples even post FTX of JP Morgan with their proof of concept with a fork of Aave, actually doing something, leveraging DeFi for their project with Bank of Singapore. We see that there's a record number of developers now, working on Ethereum on smart contracts. So we see unlike perhaps some of the other quote bear markets or cycles that we've seen in the past, there's just, I think, a tremendous amount of building that's going on now. And I think that part is very positive. As I said, there are some, depending on the type of firm, there are some things that they're waiting for more clarity on. Regulation is always an issue because no one wants to do something and find that afterwards. And even with the best intentions, they can find that afterwards they did the wrong thing. So just depending on the firm, they all have their different levels of comfort. But we're seeing, we're definitely seeing people, building, growing, and certainly coming back into the market.
Well, you mentioned the regulatory side. It's kind of hard to talk anything crypto these days without talking the other side of that, which is, of course, a regulation. We have seen this new regime over there at the SEC taking a second look at all things crypto, certainly in the wake of FTX. And it seems like they're very much laser focused on the DeFi side of the space as well. Is that a concern for you going forward, Josh, that maybe the SEC going to start cracking down on the DeFi space in particular in ways that in the past maybe it wouldn't have been on their radar?
Yeah, great question. It doesn't concern us. I would say, if anything, the biggest blocker that I've watched over the last 5 years, as far as regulation has been concerned, is just lack of clarity, right? I mean, the market is full of, participants who are looking to do the right things, who are looking to build, real solutions and real financial ecosystems, and just want to make sure that they're doing it within the guidelines of if there will be regulatory, oversight, knowing what that is. And so I think the biggest challenge has sometimes been lack of clarity on that. And for us at Fortify, we have the same approach. Sort of our job is to enable our clients to securely interact and compliantly interact with DeFi. And so for us, it's the same thing. If there's a solution that requires, as a good example, interacting on public pools, can be a risky thing because you don't know who else is in the pool. Well, there is information that can be known now, and data, transparent data that can be known, who is in the pool at the time, and tracking those addresses to potentially, malicious users. And so, there can be regulatory oversight that requires that anyone who's interacting in public pools is using infrastructure that is monitoring pool data and checking for bad users. And if that's the case, then of course this is a perfect thing for a DeFi focused wallet to interact with and integrate. And so there's a lot of things where if we just all sort of most market participants would welcome any clarity from regulators.
I think that's certainly the case. A little bit of clarification could go a long way. They've been waiting for that for quite some time. Speaking of time, Josh, we are running out of it here. We have to keep on rolling with the show. But before we roll out of the Crypto Hot Seat segment, we always like to leave our audience wanting a little more. So now, Josh, if there's any hints, any teases you could leave with our audience of what they can expect from you or the team over there at Fortify in the coming months, now is the time, sir. The floor is yours.
Sure. No, thanks. And thanks again for having us. We're super focused on continuing to build solutions that protect the users within, across DeFi. That includes additional chain support. That includes additional protections against various DeFi activities. We just recently rolled out, for example, our bridging transparency, and there'll be more opportunities like that. And so just if any of the users are interested in learning more, I just encourage them to come to fortify.com. Reach out to us, and happy to do demos with any of your institutional clients.
There you go. Check them out to learn more. Fortify.com. That's Fordefi. Get it? Fortify listeners, Fortify.com is the place to go as we keep on going right on into the Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down everything going on in the world's leading digital asset, which is, of course, the big dog, which is Bitcoin, looking a little bit smaller this week. Of course, a lot of bad news popping off in the world of crypto since our last show, most of it centered around Silvergate Capital, one of the leading banks for the crypto space, having some questions about whether they will remain a going concern going forward. So that type of thing, never good headlines for the crypto space. So as a result, most of our major assets taking a bit of a hit this week. Bitcoin doing so as well at about 22,374, almost 375 when we kicked off the show this morning. When we ended our show last week, 23,283. So you're down almost 1,000 handles, about 908 handles from where we were this time last week. The low came last Thursday in the wake of a lot of this news breaking, but it wasn't that much lower, 22,168, and the high was last Wednesday, so the day before, 23,875. So if you look at it over that 24-hour period, actually did a lot of living. We sold off from almost 24,000 and hit almost 22,000. So almost a 2,000-point swing in the span of about 24 hours. We have leveled out now around the 22,000, low 22,000 level here. In terms of vol, watching what's going out there. By the way, of course, all this data coming at you courtesy of our friends over there at amberdata.io. That's the place to go to kick the tires and light the fires. If you heard our show last week and if you missed it, you have to go check it out, listeners. We spent pretty much the whole show just diving into some great data that Greg and the rest of the team over there at Amber Data have crunched in terms of what the hell is really going on with crypto options. How do they work? How do they trade? And what are some ways you can trade them that are actually successful? And they broke it down into some very granular pieces, like how long the futures actually remain backward versus in contango. Of course, important information if you want to trade options around them. So a lot of fascinating data. Check them out over there at amberdata.io is the place to go to kick the tires and light the fires. And, of course, get that free white paper because it is really fascinating stuff. And if you're even remotely intrigued by this market, you owe it to yourself to check it out. And if you're on Amber Data right now, you would see that vol has ticked up a wee bit since our last show. It was about a 45 and a third last week, about 48 and a quarter this week. So up almost 3 points out there in Bitcoin land. Not surprising. We saw a wee bit of downside action over the span of the last week. Skew-wise, though, not a huge evolution. Last week, we were about a half a point negative, so effectively flat. This week, we are almost exactly flat. No real love, no real bias in either way out there in terms of skew. We're kind of waiting for the next shoe to drop out there. Hopefully, it's not another shoe like Silvergate Capital, but you never know at the end of the day. Let's get out to the OI. Let's see what's open for size out there on Deribit right now. Calls, you got about 188,000 calls open. That's up about 7,000 from this time last week, so not a huge change there. Puts about the same deal, 81,500, up about 5,500 from this time last week. Let's go see what's open for size out there in terms of the big positions. What are the top 5 positions that are open on Deribit right now? Let's find out together, listeners. Number 5, we have the 26,000 strike that has 12,000 contracts open. That's down about 1,600 from this time last week. It's actually our biggest. Actually, no, I take it back. Number 4 is slightly bigger, but one of our bigger movers on the week here. Number 4, we have the 24,000 strike. Remember, I said at the start of the show, listeners, we've been bouncing between almost 24 and about 22,000 for the better part of this week, and hence these strikes lighting it up here. Number 4, we have the 24,000 strike. 14,400 contracts open there. It's up about 1,800. So that is our biggest mover in terms of change of OI on the week. Number 3, we have the 25,000 strike. 13,600 contracts open there. That's up about 1,000 from this time last week. Number 2, the 23,000 strike. 15,000 contracts open there. Up about 700. And number 1, yet again, the 30K strike, listeners. It maintains its stranglehold on Bitcoin options yet again this week. 19,800 contracts, just a hair shy of 20K. That's up about 800 on the week. So all in all, not a huge week in terms of evolution of the top 5, but intriguing to see that the 30K strike still manages to cling to its top spot. Let's go see what's going on out there in your other favorite crypto product, of course, Bitto, trading 13 3/4 when we kicked off the show. That's down almost 3/4 of a point, about 0.65 from where it was this time last week. So we've been kind of vacillating into this 13.5 to 14.5 range quite a bit here in Bitto, leaning towards the lower portion of that range right now. The ADV hasn't really budged since our last show. In fact, it's literally unched 54,000, exactly what it was this time a week ago. The vol in BITO also almost literally unched 51 last week, about 51 this week as well. So not a heck of a lot of evolution on the vol front. Let's see what's open for size out here on the BITO front this week. Let's just do a top 5. On number 5, we've got the March 14 call, 16,800 of those. Number 4, we've got about 17,000 of the Jan 25s. So interesting. Some might say optimistic. This is even more optimistic, listeners, than the ever-popular 30,000 strike that seems to be dominating the tape over there at Deribit. Number 3, we got 19,000 of the Jan 18 calls. Number 2, 25,000 of the June 8 puts. Those have been out there for a while, not going anywhere for a while, I'm assuming, listeners. And the number 1 size position in BITO options right now, 28, almost 29,000 of the Jan 15s. Those make a little bit more sense, a little bit closer to the fire there than the 25s. If you go a little bit farther, if you do a top 10, listeners, you got 16,000 of the Jan 65s. That's a fascinating one out there as well. So a lot of fun paper open out there in BITO land right now, but we got to keep on rolling to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show where we explore everything outside of the big dog, which is Bitcoin, except for right now. We talk about the top 10. Bitcoin usually hanging out at the top of that list here, listeners. Number 10, we've got Binance USD. 8.6 billion hanging out for that. That, of course, having some regulatory heat of its own of late, so still managing to cling to its spot there in the top 10. Number 9, Polygon, 9.8 billion worth of market cap. Number 8, Doge. Doge still keeping its distance from the bottom, still managing to cling to its spot here around the number 8 here in the top 10. This week, 9.9 billion worth of market cap, so just slightly managing to edge out Polygon. Number 7, Cardano, 11.5 billion. Number 6, XRP, 18, almost 19 billion. It's still kind of hanging out in the limbo that it's been in for years now, listeners. Number 5, USD Coin, 43.75 billion. Number 4, good old BNB, 45.4 billion. Number 3, Tether, 71.5 billion. Number 2, it's ETH, 191, almost 192 billion. And the big dog, Bitcoin, 432, almost 433 billion worth of market cap. How's ETH faring in the wake of all this Silvergate? Well, something similar to what we're seeing in Bitcoin. A sell-off, but nothing too outlandish. We're not seeing the madness of post-FTX or anything along those lines. On our last show, we were almost 1625, even coming into today's show, 1565. So down pretty much 60 handles net on the week. The high for the week was last Wednesday again, 1665, and the low came not on Thursday, but actually on Saturday of 1556. So not that far away from where we are right now. So we're hanging out towards the bottom portion of that range. I mentioned vol changing about 3 points out there in Bitcoin land, actually ticking up about 3 points. BITO vol staying unched. We saw pretty much the exact same thing in ETH. Vol almost exactly unched. We were about 53.25 last week in terms of at-the-money vol. This week, about 53.25 in ETH vol. So not a real big swing on the vol front. Skew-wise, a little bit of a different story, which is interesting. We were leaning more towards the negative last week, about a negative 2.2, and now this week we are flat. So again, if you're confused by that, listeners, there is no premium in one direction or the other. The 25 delta call and the 25 delta put, both trading around the same vol level, which, if you know anything about options and derivatives, is unusual. So not a heck of a lot of bias in the skew there showing, hey, folks are loading up on puts or they're loading up on calls or doing anything that would really signify any real concern or bias in one direction or the other. They're kind of just keeping their powder dry, waiting for that next shoe to drop. Let's see what's going on from an open interest perspective. Calls closing in on 2.6 million contracts on Deribit right now, about 2.57 million. That's up about 70,000 on the week. The puts, 808,000, up about 16,000. We're still hanging out a little over 3-to-1 out there, calls over puts. So below that 4-to-1 level, but above the 3-to-1 level. So still very call heavy, all calls all the time out there in ETH. Speaking of calls, let's see what's going on from a position perspective. What are the top 5 size positions out here in ETH options? Number 5, we have the 1900 strike. 168,500 contracts open there. That's down 5,500 from this time last week. Number 4, we have the 3,500 strike. So once again, we are all over the place with ETH. That's got 204,000 contracts open there. That's down about 1,000 this week. Number 3, back to near at the money. We've got 1,600 strike, 240,000 contracts there. That's down 6,000. So a little bit more evolution in our top 5 on ETH this week. Number 2, back up again, the 4,000 strike, 243,000. That's up 2,000. That position doesn't really change that much. As I said before, that's been open for a long time. Clearly, a lot of it is still remnants of early positioning, and not a lot you can really do with the 4,000 strike right now. So if you have it on, I'm sure you probably just keep it on. Not really worth it for you to take it off at this point, and maybe you get a bit of a home run out of it. Either way, they haven't really seen a lot of new positioning on the 4,000 strike, but there's enough left over to still keep it hanging out around that 2 spot. But the number 1 spot, listeners, is the 1,800 strike, I should say. The 1,800 strike, 279,000 contracts open there. That's up 38,000 this week, so a lot of new positioning on the 1,800 strike here. And ETH, if you know much about how this product trades, that's probably mostly calls. So intriguing stuff out there, listeners. Let's keep on rolling really quickly. Run down some of the other top crypto assets for this week, then we'll get out of here. Solana, again, feeling a little bit of the heat. Any negative headline in the crypto space is going to hit Solana, and that's the case this week. 22.60 last week, 20.82 this week, so down about $1.78 on the week. After having, as we said, we talked about with Greg last week, a surprising rally from its depths back in the beginning of January below $10. They've more than doubled it, paring some of that back this week. XRP, not really doing a heck of a lot. Down not even a half of a cent on the week. Still hanging out right around that 37-cent level. It's been kind of glued there for a while. Doge was a little over 8 cents last week, about 7.5 cents this week, so off about a half a cent there as well. In terms of Litecoin, 93 1/3 last week, $88, pretty much even this week. It was down about 5 1/3 handles this week, so they came for Litecoin a little bit this week. Cardano, 36 cents last week, 33 cents this week, so down about 3 cents. Polkadot, 6.5 last week, about $6 this week, so down about 50 odd cents there. And our old friend Shiba Inu dropping from a whopping 0.000012 to a whopping 0.000011. All right, that is going to do it for the Crypto Rundown this week. That's also going to do it for our live broadcast on the network this week. I want to thank our guest, Mr. Josh Schwartz from Fortify, for joining us in the Crypto Hot Seat. Remember, if you want to learn more about what they got cooking out there, wallets for all of your DeFi transactions, Fortify, FORDEFI.com is the place to go. And, of course, you know where to go to kick the tires and light the fires on all this data we're talking about here and a whole bunch more. We only have an hour at the end of the day on this show. We can't even begin to scratch the surface on all the offerings they have over there on Amber Data. So how can you see it for yourself? You got to go there. Amberdata.io. AMBERDATA.io is the place to go to kick the tires and light the fires. We got to get on out of here. Back again tomorrow for all of our pro folks out there. We've got a great pro Q&A session with the one, the only Uncle Mike. Unfortunately, not going to have a lot of crypto on that. He is proudly the owner of BitcoinReallySucks.com. You can show up and ask him why he hates Bitcoin so much. He's mostly more on the traditional asset management side, so not a lot of crypto love out there this week. And, of course, Options Bootcamp, Options Playbook Radio hitting the network this week. Back again on Thursday for This Week in Futures Options, a show where if you're listening to this one, if you're intrigued by crypto, maybe you want to check out the centrally cleared version, which is, of course, the CME offering. This Week in Futures Options, we have you covered there, as well as, of course, episode 2 of the Option Block Friday. Volatility Views, if you're intrigued by all things volatility, and who isn't these days, Volatility Views is the show for you. And then all you pro folks who come back after that for Options Oddities before we come back next week, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.